Hi, and welcome to Random Rogers Big Picture for the week of March 29th. A couple of things on the agenda that are going to maybe sound like a rant, so I'll apologize up front if that is the case, but in trying to think about how to articulate my points, in my head it sounds kind of rantish, so bear with me. Okay, so first up, some reader left a comment on two different posts. It was the same comment. Ed Yardini, who apparently was on Fast Money early in the week, pronounced the bottom is in and that one should not be defensive with their portfolio. He said the Fed's injection of capital and buying treasuries to lower mortgage rates is working. Hooray, the bottom is in and the NASDAQ has regained its 200-day moving average. On the flip side, Rubini says more pain to come. Who is right? Anyone's guess. Therefore, buy and hold is the way to go. But it says buy and hold is the way to go with a question mark. So I don't know if he's asking a question or not. It doesn't read like a question, but there is a question mark there. So do what you have. Okay, so fundamental action like this is not a message of the market. If you believe that what the Fed has done should work, okay, perhaps it should work, but there's no guarantee that it will work. The market is clearly had a pretty good move up, clearly. It's kind of stalled out for a day or two, and maybe it's just stalled out, or maybe it's topped out and is going to have another big leg down. No way to know, but that the market should do something based on what the Fed, even if you assume if you agree with the premise, the market should go up because of this, well, perhaps it does become something constructive toward the building of a base and then the start of a new bull market. That certainly could turn out to be the case, although we do have reason to be skeptical based on how the Fed was slow to recognize some of the actions they've taken along the way and so forth. But be that as it may, it could turn out to work. But there is no cause and effect that says the market must go up from here. That's just not how those types of indicators work. When the market starts to show healthy signs of demand, I would feel much better about that. 50-day is one thing. The 200-day I obviously care more about. And as far as the 200-day, okay, the NASDAQ is something like 60 or 65% technology, and its heyday something like 81 or 82% technology. So it was, and I think is right to say, still is a proxy for tech. So in that light, something that is sector-centric, I'm not inclined to use that as a broad market proxy because by definition, it is not a broad market index. It is heavily weighted to tech. Just because a lot of people follow it doesn't mean it's a broad market proxy. So that it is above its 200-day, assuming it even still is, and I don't look at that, to me that means nothing. And making a decision now based on that to me makes no sense because unless you cared about it before, it doesn't make sense to care about it now. If you didn't care about it before and now you do care about it, you're sort of changing on the fly, and really I'm going to say making a big change, which is more of a reaction thing, which is more of an emotional thing, which is more of a hopping on the bandwagon, here we go type of thing, which is unambiguously what I'm trying to avoid. Okay, next up is something, I saw an article, and I won't say the stock or the guy who wrote it, an article about buying a stock, selling out of the money call, so covered calls against it, and then selling deep in the money puts. And the idea was that you would get the stock, your out-of-pocket expense would be very little, and in all likelihood, you end up, the way I look at it, the puts were so far in the money, you end up, buying more stock. And the sizing of it was 1,000 shares of the common, selling 10 calls, selling 10 puts. So you're going to end up assigned on another 1,000 shares at expiration. I don't remember the expiration date that he put on for the article, which again was on Seeking Alpha. But as kind of an odd thing, he talked about, if your options get exercised, and if they get exercised, and if you do get exercised, yada, yada, yada. Okay. If you sell options, you don't get exercised, you get assigned. When you buy an option, you have the right to exercise it, to either buy some stock or to sell some stock, depending on, it's a call or a put. But so as a seller, you are assigned. And as I read it, it's, and I left a comment, saying sellers aren't exercised, they're assigned. And the guy jumped on me a little bit, which is fine. I probably would push back on someone as well, saying, well, what difference does it make? And so the difference to me is a lot of people have blown themselves up on options. There are a lot of people who will blow themselves up in the future. Now, after reading the article, I don't know if this guy knows the difference between assign and exercise. And he didn't, in his comment, convince me that he knows the difference. Now, if he knows the difference and just worded it poorly, then it is a so what. But if he doesn't know the difference, then I think it does matter. He's doling out advice. And if he doesn't know the difference, then what else doesn't he know about the thing he's writing about? Point being, is kind of a caveat emptor with the stuff that you read. There are, and I don't know about this guy. He either knows what he's doing or he doesn't. I have no idea. But in general, as you troll through various things, you are going to find people that really don't know what they're talking about. And it's, if they're giving a specific recommendation, someone invariably is going to follow him. I mean, the trade itself didn't make sense to me, which either means he knows way more about options than me, which is certainly possible, or he knows way less. And if he knows way less, then he shouldn't be writing the article. And again, based on the article, based on this one thing and a couple of other things that weren't included, I don't know if this guy knows way more or way less. This really is a situation here where you've got more and more people out there writing, which is a net positive, but some of these people are not going to know what they're talking about. And so that's, kind of a warning, to you, especially depending on the tone of the post. I'm going to say I explore certain things and I try to avoid investment advice, buy 1,000 shares of XYZ. I try to avoid those types of posts because when I do explore things, that's the whole point. It's an exploration. I'm trying to figure something out. And so, yeah, I don't have the answers, and I try to communicate that to you. Hopefully that's clear, although I know from some comments not everyone reads the entire post, but they comment anyway, which is kind of tough, but what are you going to do? Thanks very much for all the comments on the CNBC thing. I got a lot of Facebook comments too. It seemed like a lot to me anyway. How about that? And the feedback on the website was nice, although to Jeff in Italy, brother, you think way too high of me. I'm not D-list because I've had to say no a few times and they keep calling back, but I'm not better than C-list on their roster, that is for sure. But it's fun nonetheless. Got a little more basketball this weekend. The college lacrosse season is up and running. That's all good. We got Major League Baseball just a week away, a week and a couple of days. Not too shabby. Have a great weekend.